All right, in this video, I'm going to walk through the difference between an LLC and an S-Corp in terms of just payroll taxes. Why one entity is more advantageous than the other entity. As we're heading into the new year, there's a lot of people that want to start a business, whether it's a simple consulting or they're selling something online. And one of the questions is how should they incorporate, whether it's a S-Corp, LLC partnership. In this video, I'm just going to focus on the payroll taxes and what you should consider. But again, both of these entities, they have their pros and cons, and I'm not going to cover all of them in this video. I'm just going to focus on the payroll taxes. So one advice I do have, if you are starting your own entity, is get signed up with an attorney, especially if you have partners or multiple owners, because we've seen it before. We work with a lot of different business owners, and if one owner decides to leave, what's the buyout? And if you don't have those documented in the agreements, they could come bite you later on. So again, payroll tax differences, LLCs, S-Corps. I'm going to show you 2 Excel templates, and if you are interested in seeing them, so you can kind of play around with them yourselves, just leave a note in the comment box. I just might share it with the whole community here if there's enough interest. All right, so this is one of 2 of the Excel files I'm going to show you. I guess let's just kind of dive into this. I'm going to keep it pretty high level. So if you have comments, questions, leave them in the chat box below. But we got a partnership / LLC here. And we've got an S-Corp. To make things equal, so we can kind of see the tax savings here, they each have profit at the end of the year. So revenue less expenses of $250,000. Okay. In the partnership itself, the owners, they don't get a W-2. So whenever they want to pay themselves, they either take a distribution or a guaranteed payment. But those distributions and guaranteed payments aren't deducted from here. So to make things really simple, they take distributions. Those are not deductions from the net earnings, okay? But this 250, right? The partnership and the S-Corp, the entities themselves don't pay any tax to the IRS, okay? On a federal level. It's the owners that pay the tax on this profit, okay? So it's a very important concept. So each owner, just say there's 2 owners here, each one's going to get a tax form called a K1, and that's going to show their portion of the profit here, their portion of this $250,000. Similar with the S-Corp here. The owners, they're going to get a K1 from the S-Corp, kind of showing what the profit is, and then they put that on their personal return, and that's how they kind of calculate the tax. Well, with partnerships and LLCs, they're subject to self-employment tax. And if we look at the Social Security here, and this is 2021, so it's $142,000, the Social Security rate is 12.4%. So the tax on this, and you kind of max out at this $142,000, the tax on that is $17,700. Then there's the Medicare tax, right, which is 2.9%. So that's $6,695. So the total kind of quote unquote payroll taxes that the partnership would be subject to paying would be $24,000. Okay. Again, the partnership's not going to kind of pay this. It's going to be the owners that are going to be paying this. But here's the tax that these owners are going to be subject to here. Okay. Now we go down the S-Corp. The S-Corps are a little different, right? The S-Corps, here's the profit. So we're starting out equal here before the owner's salary. Now, as an S-Corp owner, you have to be on salary. You have to get a W-2. So in this example, the owner is going to get paid $100,000, okay? After that, and that's a deduction, by the way. So $250,000 less the owner's salary. So now we're down to net income of $150,000. If it's just one owner, they're going to get a K1 showing net income of $150,000, okay? And then they're going to pay tax on that on their personal return. So, and then the owners can kind of take distributions, and those are not going to be subject to tax. So similar to S-Corps. But here in this example, the payroll tax, right? So the payroll tax that the S-Corp has to pay, which is essentially kind of payroll, is this $12,400, and that's just 12.4% of this 100,000, and you got the Medicare. So the total payroll taxes that the S-Corp has to pay is $15,300. Okay, now part of that, half of this, the employer is paying, right, the company, and the other half, the employee is paying, but the S-Corp is still writing the check. Okay, so these are the total payroll taxes that this S-Corp has to pay. Now, if I change his salary to a different number, it's going to change this. I'm just using 100,000 as an example. And then with the partnership, so you can kind of see here the difference, the tax savings. So it's a lot beneficial in this example, right? Because the salary, the owner is paying themselves a salary of 100,000. Look at the tax savings here by electing to become an S-Corp. And then you also have to consider, in as I started out the video, you're thinking of what type of entity you want to be. Well, if you're an S-Corp and you have no employees, you have to put yourself in payroll. And we would recommend that you get set up with a payroll company, right? And payroll companies aren't cheap, and even the cheapest one, $40 a month or so. I can change this here, but that's $500 a year, right, for very basic payroll processing. So I'll put $500 here. And then, there's the cost to prepare the tax returns too. And what's the difference between both returns? That's another thing to kind of figure out. But that's one thing I always tell people is S-Corps, right? You got the tax savings, but then you got to put yourself on payroll, and you got to file quarterly payroll tax returns and everything. So if it's just you, there's a service out there called Gusto. I think they charge like $45 a month. So for the year, you're looking at like $500, which is not bad for the fact that they're preparing your W-2 and all that. On the partnership level, and it's just two members, for example, you can't put yourself on payroll, so you don't have to pay a payroll processing company. But then you have self-employment tax you got to pay on the personal tax level, and the taxes are higher. Okay, so again, if you're just looking at it from a payroll tax standpoint, the benefit here is you might want to elect this be an S-Corp here. But again, if you're thinking about selling the company, if you're thinking about bringing on investors, if you're thinking about doing other things, maybe an S-Corp is not the right way of establishing your company. So those are the type of things you got to think about. It's not just this. I wanted to just kind of show you a video on just the tax component and why a lot of smaller businesses go down the S-Corp route, because there are some advantages here. However, we've seen this many times. If you try to sell your company, or you try to bring on international investors, you want to bring on a lot more investors, this S-Corp is not a good way to kind of get established. So the other Excel file I wanted to show you is what this looks like on a personal tax return. Okay, so on a personal tax return, you got the LLC, right, and you got net income of $250,000. Okay, then there's self-employment tax, right? So let's see, going back to here, right? So here's the total self-employment tax, $24,000. Now on a personal tax return, you get to deduct half of that. Okay, you still got to pay the $24,000, but you get to deduct half of that. Then there's this QBI deduction, which I'm not going to get into the details here. It's a great deduction for both LLCs and S-Corps. So in this example, I kind of factor that in. You got the filing status. This is married, filed, joint. Okay, so your total taxable income is $170,000. You got federal income taxes, you got self-employment tax, so your total tax is $53,000 here under an LLC. If you're an S-Corp, right, you got the $250,000, but remember, part of this is wages and part of this is a pass-through entity. okay? Now the payroll taxes that the S-Corp paid, so let's go back to that other Excel file here. So remember that $15,000, remember how I said half of this the employer pays, half of it the employee pays? So we'll go back to here. So we're going to deduct the part that the taxes paid by the S-Corp. You got this QBI deduction, you got the filing status, so your total taxable income is $189,000. Tax on that's $33,000, okay? But then you got to add in your portion, right? And then the S-Corp portion. So still total savings from a personal tax standpoint is $4,600 in this example. So it's still not a bad deal from a tax standpoint, right? On just very basic taxes. But again, if you're kind of looking to kind of grow your S-Corp, get investors, sell later on, maybe an S-Corp is not the right election to make. But if you're kind of just a small company, you're not looking to do anything, significant, one owner, maybe one or two employees, S-Corp may not be a bad route. If you're an LLC, I think, you're seeing the high taxes here, but there's also some other benefits, which again, I'm not going to cover in this video. So anyways, big picture, payroll taxes, you can see the savings here between an S-Corp and an LLC. Hopefully this video helps. I know it's a question that we get a lot, and I wanted to kind of put this out before the end of the year because I just get a lot of questions from new business owners on, what should I be, an S-Corp or an LLC, and especially from a tax standpoint. So hopefully this video helps. If you have any comments, questions, please leave them in the message box below. Thank you.